we have another management joining us today, Angshu Mallick, who's the CEO and MD of Adani Wilmar, and Shrikant Kanhere, who's the CFO of Adani Wilmar, joining us right now on the back of the results. Hello, gentlemen. Welcome to ET Now. Mr. Mallick, my question to you...
Thank you for inviting us.
Right. Mr. Mallick, my question to you is that, if you look at the numbers, the margins have come in flat on a year-on-year basis. Do tell us, what are your expectations in terms of margins, and is the worst really behind us?
I think the biggest story is that there is a complete turnaround from Q1 and Q2 performance compared to the bottom line we had and this quarter. So that we are now back in the normal, what we can say. Business has been steadily growing. This quarter also, the volume growth in food and industry essential continues. Edible oil has been flattish, but on a 9-month basis, if you see, packed edible oil has grown at 16%, which is possibly the highest in the last 4-5 years that we have shown. So edible oil business is steadily growing, and I see great future in staples business.
All right. Thank you so much for your take with Shrikant. Talking to you on the number front, this time the margins were actually flat for the company. But what is the outlook going ahead? Can we expect some improvement in the margins going ahead, as well as any outlook that you can share us on the palm oil prices?
The prices have now been stabilized, and we have seen in the past when the prices were close to $2,000 a ton. Now most of the prices now are in the range of $1,000 and below $1,000. So the price level, I think the industry is comfortable, and so is our company. Sequentially, yes, we have been able to turn around. In fact, for Q1 and Q2, we had posted losses because of the reasons we all know. I think we are back to the normal. Our run rate on EBITDA as well as on the bottom line is as what we were earlier also declaring when still last year. So as we go forward, the Q4 I think should be better than Q3, and I think whatever we have been able to showcase on the volume trajectory in terms of growth, that should continue, particularly in the food and industry essential segment.
Mr. Mallick, coming to you, how is the commodity prices shaping up, and do take us through the demand trends in the rural and the urban areas, and what's the outlook?
See, as far as the demand is concerned, growing at 16% up to December, April to December is itself showing that people are consuming edible oil much more than what they were, because possibly the prices are lower and affordability has increased, number one. Number two, what is good is that the brand Fortune has been growing faster than our other brands. That is because during COVID and when the prices were high, we have seen Fortune growth slowing down. But now the reverse is happening. When the commodity is low, the Fortune brand is, as the strongest brand in the country, is growing faster than other brands. That is one. Two, rural, I wouldn't say very bad, although a lot of FMCG companies are facing the pressure. For staples, we have seen at least the rural is maintaining the 30% share that it used to give. So on the whole, there is not much of issue. What we have seen good is our e-commerce business and modern trade. This is growing much faster and possibly higher than 20-25%. So e-commerce is growing fastest.
E-commerce is growing the fastest. But lastly, Shrikant, I can have your take on two of your segment, that is the food and the FMCG business. They are in the investment phase currently. But going ahead in FY25, what kind of a contribution can we expect from these two segments specifically, and what is the growth outlook?
See, the food and FMCG, of course, remain a focus area for us, because we have been transitioned from an edible oil company to now a full-fledged food company. Our atta business, which is a wheat flour business, has consistently growing. I mean, this year, this quarter, it has grown at 45% year-on-year, which is quite a significant growth for any company to record. We are quite bullish on this particular segment, and as we move forward, and you rightly said, it's still at a development stage, and we are building the market, and therefore we are quite aggressive on the pricing of the products, and therefore the whole focus is how can we grab the more and more volume share and market share. I think we are almost there. This basket should touch close to 1 million ton by this year end, and therefore at the moment we get into the next year, I think we have a very good level playing field for us to start consolidating margins on this particular segment.
All right, gentlemen, on that note, we'll let you go. Thank you so much for joining us today. And well, with that, it's time for us to slip into a short break.